A company that has lost over $40 billion since it was founded is about to go public next week in the largest IPO in human history. And Wall Street is lining up to buy. In 2003, a man took the money he made selling PayPal, walked into the aerospace industry, and watched his first 3 rockets explode. Nobody thought he would survive. He almost didn't. That man was Elon Musk. That company was SpaceX. At the time, rockets were the business of governments. Of NASA. Of Boeing and Lockheed Martin, companies with decades of institutional knowledge and billions in defense contracts. A Silicon Valley entrepreneur showing up to build rockets wasn't seen as competition. It was seen as a punchline. Musk himself estimated SpaceX's odds of survival at 10%. Then the 4th rocket launched successfully. And everything changed. In 2015, SpaceX landed a rocket booster back on the launch pad vertically, intact, ready to fly again. Something Boeing and Lockheed had spent decades failing to achieve. SpaceX did it in 12 years, and in doing so, cut the cost of reaching orbit by more than 90%. Then came Starlink. Starting in 2019, SpaceX began deploying a constellation of satellites in low Earth orbit. Today, more than 9,600 Starlink satellites are in orbit. The service covers 164 countries and has 10.3 million paying subscribers. It provides internet to remote villages in the Himalayas, battlefield communications in Ukraine, and connectivity to cargo ships in the middle of the Atlantic Ocean. This is not a normal tech company. On May 20, 2026, SpaceX filed its S-1 with the SEC. For the first time in the company's 23-year history, the public could see its real numbers. What they saw stopped everyone cold. This company lost $4.9 billion last year, lost another $4.3 billion in a single quarter this year, and Wall Street is valuing it at $1.77 trillion. That number is larger than the entire GDP of Australia. How is that possible? Let's put the confirmed facts on the table first. SpaceX 2025 total revenue, $18.7 billion. Up 33% year over year. These are confirmed figures from the SEC filing. SpaceX 2025 net loss, $4.9 billion. SpaceX Q1 2026 net loss, $4.3 billion. In a single quarter. Total accumulated deficit since founding, $41.3 billion. But here is the other confirmed fact. Starlink, the satellite internet division, generated $11.4 billion in revenue in 2025, 61% of the company's total, and posted $4.4 billion in operating profit. So how can the same company be both losing money and making money at the same time? Because SpaceX is actually 3 different businesses inside one company. Business 1 is Starlink. This is the cash machine. $11.4 billion in revenue. $4.4 billion in operating profit. Growing at 50% year over year. Business 2 is Space, the rocket launch business. $4 billion in revenue in 2025. But SpaceX is simultaneously spending over $3 billion per year developing Starship, its next generation rocket. This division roughly breaks even. Business 3 is AI, the XAI division, which Musk founded in 2023 and merged into SpaceX in early 2026. Its main product is an AI chatbot called Grok. This division lost $6.4 billion in 2025. In Q1 2026 alone, SpaceX spent $7.7 billion in AI capital expenditure. The conclusion is straightforward: Starlink is making money. Rockets are self-sustaining. AI is burning cash at a historic rate. Every dollar SpaceX is losing right now is going into AI infrastructure. Here is the question Wall Street is actually betting on: what if the next Amazon Web Services isn't built on Earth at all, but in orbit, powered by the sun, with zero land cost and unlimited scale? To understand why investors are willing to pay $1.77 trillion for a loss-making company, you need to understand how growth stage valuation works. Investors aren't paying for today's profits. They're paying for a discounted estimate of future cash flows, what this company could earn over the next 10 to 20 years. SpaceX's S1 puts a number on that future: $28.5 trillion total addressable market. The company calls it the largest actionable total addressable market in human history. I want to be clear, this is SpaceX's own projection, not a confirmed fact. But the underlying logic has three components that are worth examining seriously. The first is Starlink global infrastructure. Approximately 2.6 billion people on Earth still lack reliable internet access. Ground-based cell towers will never reach the deep ocean, the high Arctic, or the mountains of Central Asia. Starlink can. And the subscriber growth curve is steep: 2.3 million users in 2023, 4.4 million in 2024, 8.9 million in 2025, 10.3 million by March 2026. Analysts at Bloomberg project Starlink revenue could reach $15.90 to $24 billion by end of 2026. At its current trajectory, Starlink is not a consumer product. It is becoming planetary infrastructure. The second is the rocket cost revolution. SpaceX has compressed the cost of putting 1 kilogram into orbit from roughly $50,000 in the early 2000s to approximately $2,700 today. That 94% cost reduction doesn't just make SpaceX more competitive. It opens entirely new markets that previously couldn't exist: satellite broadband, space tourism, orbital data centers, because the physics only become economically viable below a certain price threshold. The third is the orbital AI thesis. This is the most speculative part of the story, and it must be labeled as such. SpaceX's S1 describes a plan to deploy AI compute satellites in orbit by 2028, running inference workloads powered by solar energy, cooled by the vacuum of space, connected to the ground through Starlink. The company is already executing on related contracts: a confirmed $1.25 billion per month compute deal with Anthropic, and a reported $60 billion option with the coding tool Cursor. If orbital AI compute becomes viable, SpaceX would not just be an aerospace company. It would be an AI infrastructure company with a physical moat that no competitor can replicate. Every rising empire leaves a falling one behind. If SpaceX succeeds, several companies will find that a significant piece of their core business has been quietly taken away, and their shareholders may not have fully priced that in yet. Let's map the redistribution of interests. The first loser: traditional telecom operators. Starlink's expansion doesn't just target underserved rural markets. It threatens the pricing power of every major telecom operator on Earth. When a satellite can deliver high-speed internet to any location on the planet for $60 a month, the moat that AT&T, Verizon, Vodafone, and hundreds of others built through decades of ground infrastructure investment starts to erode. In 2025, Starlink launched direct-to-cell service, bypassing ground towers entirely and connecting directly to standard mobile phones. For operators whose entire business model depends on tower leases and data fees, this is a structural threat, not a peripheral one. The second loser: Amazon AWS, Microsoft Azure, and Google Cloud. If SpaceX's orbital AI compute plan reaches deployment in 2028, the cloud infrastructure market will face a competitor unconstrained by land cost, power grid capacity, or cooling infrastructure. The two biggest cost bottlenecks for today's data centers are electricity and real estate. Orbital compute runs on solar power and occupies no land. If the technology validates, SpaceX could offer compute capacity at a marginal cost structure that ground-based data centers cannot match. AWS and Azure have spent 20 years building infrastructure advantages. Orbital compute doesn't eliminate those advantages, but it compresses the pricing power that makes them so profitable. The third loser: Boeing and legacy aerospace contractors. This disruption is already underway. U.S. government launch contracts were, for decades, effectively monopolized by ULA, the Boeing-Lockheed joint venture. SpaceX has already taken the majority of that business. If Starship development succeeds, per-launch costs will fall further into the low millions of dollars. At that price point, ULA's cost structure becomes very difficult to defend. This isn't a prediction about the future. It's a market share transfer that is already visible in the data. One-sentence summary: Starlink is cutting into telecom. Orbital compute is cutting into cloud. Starship is cutting into legacy aerospace. SpaceX is not creating a single new market. It is simultaneously attacking three very large ones that already exist. You might think this is a Wall Street game that has nothing to do with you. But if Starlink becomes the backbone of global internet, and it is already on that path, it will affect how billions of people live, work, and connect, whether they own a single share or not. Let me translate this into concrete scenarios. Scenario 1. You live in a remote village in Southeast Asia or Sub-Saharan Africa. Today, you have no reliable internet. Your children cannot access online education. Your small business cannot reach customers outside your region. Starlink's expansion could change that within 5 years. This isn't a product pitch. It's a question of whether global connectivity gets treated as infrastructure. Scenario 2. You are a retail investor in the United States. On June 12, for the first time in history, you can buy shares in SpaceX through Schwab, Fidelity, or Robinhood under the ticker SPCX at $135 per share. You will be buying a piece of the most ambitious private company to go public in the modern era. That is a genuinely new thing. Scenario 3. You work in tech. If orbital AI compute becomes real, the cloud infrastructure market gains a competitor that is not constrained by land prices, power grid capacity, or data center cooling costs. That changes the competitive dynamics for every cloud provider: Amazon, Microsoft, Google, in ways that are not yet priced into their stocks. Before you decide whether to participate in the largest IPO in history, here are the questions nobody is answering clearly, and they might be the ones that actually determine whether you win or lose. Any serious analysis has to confront the other side of the argument. Here are 4 risks that deserve more attention than they are getting. Risk 1. The valuation depends heavily on a business that doesn't exist yet. SpaceX's AI division lost $6.4 billion in 2025. Its main product, Grok, has been rated by multiple independent analysts as the weakest offering among major AI players. The orbital compute plan won't begin deployment until 2028, at the earliest, and faces enormous unresolved technical challenges. The $26.5 trillion AI TAM that anchors a large portion of SpaceX's valuation is built on infrastructure that has not yet been built. Risk 2. Starlink's revenue per user is declining. Average revenue per Starlink subscriber was $99 per month in 2023. By March 2026, it had fallen to $66, a 33% decline in 3 years. More users are joining, but each user is contributing less revenue. This compression of unit economics suggests that Starlink's profit ceiling may be lower than the headline subscriber numbers imply. Risk 3. Elon Musk is a single point of failure. SpaceX's own S1 identifies this as a formal risk factor. The document states that Musk is critical to the company's strategy, vision, and execution while simultaneously managing Tesla, xAI, X, and multiple other ventures. Any event that affects Musk's attention, reputation, or availability represents a material risk to SpaceX specifically. This is not speculation. It is a risk the company disclosed to regulators. Risk 4. Ordinary investors are buying without real control. The shares available to retail investors on June 12 are Class A shares, with limited voting rights. Musk retains control through a separate share class. Beyond the governance question, index inclusion mechanics mean that passive funds tracking the Nasdaq 100 may be forced to buy SPCX within 15 trading days of listing. This creates a short-term technical demand spike that has nothing to do with SpaceX's fundamentals. Once that passive buying window closes, the stock's price discovery process begins for real. The largest IPO in human history isn't oil. It isn't a bank. It isn't even the internet. It's a story that started with 3 exploding rockets and a founder who gave himself a 10% chance of survival. SpaceX's public listing is, in a meaningful sense, a vote on a single question: do you believe that space is the next internet? The bulls say Starlink has already proven its model. Reusable rockets have already transformed the economics of the industry. The combination of space infrastructure and AI is a genuinely new category that no competitor can replicate. The bears say a $1.77 trillion valuation prices in years of future execution before a single share of public proof exists. And an AI division losing $6 billion a year on a product that ranks last in its category is a serious problem hiding behind Starlink's numbers. Both sides have a point. That tension is exactly what makes this a genuine bet, not a certainty. Whatever you decide about SpaceX, June 12th is worth watching closely. Because the price the market assigns to SpaceX on that day will tell you something important: how much the world currently believes the future is worth.